friends, and welcome to the CUInsight Network. I'm Robbie Young, Vice President of Strategic Growth at CUInsight, and on this show, I have conversations with thought leaders who support the credit union community. We'll identify issues affecting credit unions and discuss best practices so that we can all learn and improve. My guest on today's show is Scott Patterson, President and CEO of CU Student Choice. Scott, thanks so much for being here.
Thanks for having me, Robbie.
So most of us didn't grow up thinking we would work with credit unions. What did you want to be when you grew up?
Well, that's a good question. Some of us, I think, are still trying to figure out what we were going to do when we grow up. So just count me in on that continued journey here. But all seriousness, when I was in 8th grade, I had the opportunity to live in China with my parents. My dad was a U.S. history professor and taught graduate students for a year as part of a joint venture between Johns Hopkins University and Nanjing University. And that was 1990, and a very interesting time to be in China. There was a lot of economic growth. Internationally, they were opening up as a country, and that was really starting to gain steam in what had previously been a very, very, closed society. And that included, a new focus on capitalism and new business development. And I guess I was very impressionable at the time for me at that age. And I really got to understand the culture there in ways most foreigners hadn't had that same kind of exposure in China. And when I came back to the US, I was lucky enough to have the option to take Chinese language in high school and then continued that through all 4 years of college in Texas. And so I ultimately graduated with a minor in Chinese language and a major in international business. So I was pretty convinced throughout that time I'd probably end up doing business in China as a result. However, that was also the time of the first .com boom in the 90s. And I had done 2 summer internships with Callahan Associates here in Washington, D.C. And I guess, my exposure and interest in credit unions and their mission and purpose in our society was also very inspiring to me. And so, I guess the short answer to your question is I thought for sure I was going to be an international business person working probably in China. And that never happened.
That's super cool. I have always been somebody who very much is interested in other languages, and our daughter even is in a Spanish immersion program. So that's really neat, and that journey, how it all kind of culminated into CU Student Choice. What was the journey like getting to your specific role as president and CEO at CU Student Choice?
Well, I guess I'll just pick up where I left off. I mentioned I had internships in college through Callahan. One of those was as an early internet strategy and website developer for credit unions. I worked it was a CUSO actually at the time called CUIL, which stood for the Credit Union Online Organizational Link. It was started by a collaboration of several large pioneering credit unions in the mid-1990s. And the whole idea was to help credit unions establish their services to members online. For most of the credit unions, the first order of business was simply to have just interactive websites. And the CUSO was there with web strategists and designers to help effectively turn their rack brochures into compelling websites. The whole idea around the CUSO was, hey, this internet thing seems like it could be important. Again, you got to go back to the 90s. This could be important. Maybe we should try to do something on the internet together collectively as credit unions and pool our resources and help each other navigate kind of this new area of commerce. But, later came internet home banking and online loan applications and more. But that was my first exposure to credit unions, and it was through the collaborative CUSO structure, which obviously has its important roots and part of who CU Student Choice is today. Upon graduation from college, I was offered a full-time job at Callahan to be part of a new e-commerce team that included the development of the company's solutions on the internet. We launched a B2B strategy information website, creditunions.com, in 1999. We pioneered webinars as a way of sharing best practice and strategy within the credit union system. I led the migration of the company's CD-ROM software peer-to-peer at the time to a fully web-based platform. So I guess you could say I was hooked on credit unions and very proud of the work we were doing to support the credit union system while I was there at Callahan. A few years later, I had the opportunity to become a partner owner at Callahan. This was all over 20 years ago. Wow. And in 2007, I was completing my executive MBA. There was this new collaborative CUSO initiative that was starting with Callahan's leadership, but also included organizations like PSCU. It included a group of about a dozen leading credit unions across the U.S. And these were large credit unions, all over $1 billion in assets. And that was the start of CU Student Choice, which officially launched the next year in 2008. I started off as executive vice president for the CUSO, spending the bulk of my time, just helping get the CUSO off the ground and grow in the early years. A short few years after that, I became president of the CUSO, but I was still technically an employee of Callahan. And so as is the case for a lot of new CUSOs that are getting off the ground and getting going, there might be a management services agreement with the credit union that started the CUSO, or in this case with Callahan Associates. But in 2017, the CUSO had gotten, frankly, just so large that the board of the CUSO offered me the position of president CEO at the CUSO, and I formally left my position at Callahan to be 100% focused on CU Student Choice. So that's sort of the journey I was on from the time I first started in the crediting system all the way up until where I am today at CU Student Choice.
Wow. I certainly wasn't counting the years in there, but I think you kind of did that for us.
You usually come by fast.
Can you tell me a little bit about CU Student Choice and where and how you all add value for credit unions?
Sure. I mean, this really goes to our origin story, why we exist, right? So CU Student Choice came about because a group of leading credit unions came together to serve a very real member financing need. As the cost of college steadily has increased, the student and family need for financial assistance beyond federal loans was growing. At the time in 2008, when we launched the CUSO, you could count the number of credit unions that were offering a private student loan on just one or two hands. And most of those weren't what we would consider today, or even at the time, to be best practice for a private student loan solution. So the credit unions we interacted with at the time all had a very similar story, right? Members were coming into the branches, they were calling the call centers, but the credit unions didn't have a private student loan option to help them. Instead, the credit unions were referring their member relationships to other student loan providers like Sallie Mae and others. These credit union leaders that came together to form CU Student Choice were frankly just tired of turning their members away to others, right? They wanted to serve their members' financing needs, and they decided that the best way to do that wasn't everyone try to figure out on their own, but can we collaborate to create the CUSO that would be, majority credit union owned and controlled, that's there to help credit unions get into this business efficiently, to be there for our members when they have needs like this, to bring a strong competency in this area of lending to the credit union system, and also provide that as a benefit to all interested credit unions across the U.S. that may have this same desire or same need to serve their members with this solution. And ultimately, just to help credit unions more responsibly serve what we've always called the next generation of members, right? And what we mean by that is these young members are highly attractive to credit unions. I think we all know that the average age of the members has only gone up over the last several decades, but to be an effective credit union, you have to have both borrowers and savers, right? So these young members are super attractive because they represent mostly young college-bound members that upon graduation will be starting their professional careers, right? It's a great opportunity to serve these members and establish productive relationships really before every other major bank, or these days every major fintech, is going to be aggressively courting them for checking accounts, credit cards, auto and mortgage loans, et cetera, right? So in other words, when you're a student with limited to no income and either no credit score or a very thin file, you're not very attractive to the big banks, right? But once you've graduated and have that career and are entering the prime borrowing years of life, in your 20s and 30s especially, everyone wants their business. Everyone. The student loan provides an opportunity just to establish those relationships early. So being there for the member need and establishing that relationship early was really the main reason the CUSO was started, right? It's always been what's most attractive to the credit unions involved. It's not really about creating a big student loan portfolio or anything like that. This is a very niche area of lending for most credit unions. Even among our largest credit unions today, it rarely tops 5% of their loan portfolio in the asset class here, and often much smaller than that. It's really about who these members are and their life stage, where they're at, and what their opportunity is to serve those members for the next 10, 20, 30 years. So today, the CUSO provides a full service offering to over 250 credit unions today. 85 of those credit unions are each over $1 billion in assets. We're a B2B brand to credit unions, and that's really important. In our solution, this is the credit union's loan. It's the credit union's relationship with their member. But the CUSO brings best practice expertise in this relatively niche asset class. And we help the credit unions every step of the way, from marketing collateral, originations, servicing, legal regulatory guidance, portfolio analytics, and all the other things that credit union would need from a world-class student loan department if they were to have their own department in-house. But because it is the CUSO's technology and it's the CUSO staff that manage all this for the credit unions, it's a very turnkey and efficient solution. In fact, most of our credit union partners today don't have full-time devoted staff to student lending, which means you can engage in what's a very niche asset class very effectively while still employing best practices and new value for their members. So again, for most of the credit unions, this is a pretty small niche asset class, which is why a CUSO solution makes a lot of sense for most credit unions.
Now, that's really interesting. And so, as we know, many credit union members are navigating college costs. And of course, credit unions are always looking to support members as a financial resource. What insights can you share about the world of higher education finance?
Well, there's lots of pressure on college-bound families today. I have 2 sons in college right now, and I can tell you it could be complicated to understand, even for me, and I do this for a living, right? This is a purchase decision for most families that happens just once or twice. If you have a couple kids, it'll happen twice. But it's not like buying a car or a mortgage, right? You over time, you learn how to more effectively buy a car once it's your second, third, or fourth car that you bought, or your first, second, or third mortgage that you've had or refinanced, right? You learn about that over time. This is something that just sort of happens at a life stage, and usually only once or twice in someone's life where this becomes something that they need to figure out and learn how to do. So it's challenging for families with limited experience. We see this as a purchase decision. It's an investment. It can be one of the most empowering investments someone makes in their lives, right? And an auto loan will depreciate an automobile will depreciate the moment you drive it off the lot, right? It's not necessarily a great investment. But attaining a college degree can be, if it's done responsibly, one of the most empowering investments you can make. And so helping families with this purchase decision, help them understand, figure out who to turn to for help. Colleges do help some, but not nearly enough, frankly. And many are forced they just turn to the internet for answers. And sometimes that can be helpful, and sometimes that can lead people down the wrong path. But it was a credit union leader from a large credit union that used to say, and I think this is still true today, he said, in America today, those who know the least pay the most for financial services. And that's very true today in student lending as well. So the credit unions through CU Student Choice and the credit unions themselves have a real opportunity to help families make more informed decisions around this purchase and this investment. So on top of just that general confusion, there's also just the very high cost of attendance. In this past academic year, which would be the 2024-2025 academic year, the average cost for full-time undergraduate students range from nearly $30,000 per year for in-state students at public universities to well over $60,000 a year for private nonprofit 4-year students. So this is, a major financial commitment for most families, and especially for our members when they get to this life stage. And for families who are committed to attaining a college degree for their sons or daughters, this is a major investment, and credit union financing to attain that is very important to be there again for the member. And to top all that off, we have today's rate environment, and the cost to borrow was low for many years and is now significantly elevated for pretty much all consumer loan categories. And that's especially true for federal student loans as well as private student loans as well. So there are a lot of challenges that families face, but credit unions still have the opportunity to be part of the solution to what is effectively a kitchen table financial issue, right? The stability to be there for the member when they have this need. Part of our story of launching the CUSO, you might have heard me say earlier, we launched in 2008. That was a pretty interesting time to launch a business, especially in financial services. We were going through the Great Recession, of course, at the time. A lot of lenders were pulling back in major ways. Sallie Mae itself was mainly a specialty finance company at the time, really relying on securitization markets for the loans they were originating. And those markets were, I think the term was at the time, we called them dislocated, which meant that their cost of funds went up very high. And a lot of interest rates for a lot of student loans were very, very high as well. And credit unions really, they stepped in to help the member with that need at a challenging time. Our business launched in 2008, and we literally added dozens and dozens of credit unions over the next couple of years, primarily because the member need was so pronounced at the time, right? They weren't able to get the solutions that they needed in the marketplace without the credit union assistance. So credit unions still have a real opportunity, part of the solution to these challenges and needs for members, and the members will turn to credit unions for that support.
Yeah. And as somebody who is rounding out their graduate degree, I can confirm that it is not cheap.
It is not cheap, that's for sure.
So, as with any change in administration, we are watching for policy changes that could impact credit unions and their members. From your perspective, do you anticipate any change in administration bringing any changes to student lending?
This is the big question right now, without a doubt. The short answer is we expect changes, but we don't know yet what those changes will be exactly. But the federal government's role in this today is huge, and any changes that are made could have dramatic impacts. In recent years, about 85% of all student loans originated each year are done directly by the federal government. So just a little under 15% are private education loans, like those originated by credit unions, banks, and fintechs. And so really the way to look at private student loans are like gap financing, if you want to think of it that way. Hopefully you have your savings, right, that the families made over the years. You have federal student loan funds available. And then for many families, there's a gap beyond where the federal loan assistance leaves off. And that's where private education loans come in. That 15% is vitally important for families. It represents that gap financing needed to help families pay for the costs beyond what they have readily available from savings and federal loan eligibility. So in other words, once families determine the costs and what scholarships or grants or federal loans they're going to take out, they have that gap. And if there's something that keeps mom and dad up at night, it's not, will we get federal student loans for our son or daughter? Those are pretty easy to get and take out. It's sort of, how are we going to cover the rest, right? And so the strategic need that families have, where they turn to their credit unions for help and support, is that gap financing. But in terms of the administration, there's just major uncertainty, and there's certainly some chaos that's happening here right now. The Department of Education seems pretty clear it's at least going to be gutted somewhat. They're talking about federal student loans now being transferred to the Treasury Department. There's layoffs happening. A lot of education research is being canceled. I think the president's quote to Linda McMahon, who's the nominee, I don't think she's been confirmed yet, was, I think, I'm paraphrasing here, but I think he said, "I told Linda, I hope you do a great job and you work yourself out of a job." So the biggest question of all is, will there even be a Department of Education in the near future? And that's probably the biggest question on everyone's mind. And if that is gone, what does that mean? In theory, it should take an act of Congress to get rid of the department, but there's a lot of talk about effectively a lot of the services in the Department of Education just being gutted and moved to different places. So student loan changes are the biggest question here that we don't have an answer to. Those are part of law passed by Congress. So I would assume that going into this summer, unless Congress makes significant changes, that we'll see similar federal student loan options for families this year, but that could change. And there's already a lot of rumors swirling around change of priorities. The Grad Plus program is something that has been criticized by really from people on both parties. If you read a lot of the newspaper headlines and articles around people with crushing student loan debt and unable to make their payments, et cetera, a lot of that is in graduate school lending because the Grad Plus loan goes up to the full cost of attendance, meaning you can get 100% of your full cost of attendance, meaning tuition, room and board, everything, financed by the federal government. And grad school is very expensive. And so you have people that, if you're going to get an MBA or other types of jobs, you're probably a great investment still, but you have a lot of people that are going to other graduate programs where, frankly, $200,000 plus in student loan debt is probably going to be very hard to pay off, right? Depending on what type of grad school degree you're getting. There's talk of limiting the Parent Plus program, which is another for undergraduate students where the parent is the one actually taking out the loan. That can go up to the full cost of attendance as well. There's rumors that there will be changes there. So, but again, these are all rumors and this remains to be seen. But there do appear to be changes in the near and medium term, especially with respect to the Department of Education and the services it provides. We know that one thing's for sure, that this is one of the main roles of the CUISO here, is to help credit unions make sense of all of this and understand what are the evolving needs of members going to be as we look into the future. And that's something that we're keeping our ear very close to the ground, finger on the pulse, and trying to better understand what these changes might be and what we need to do to help credit unions serve that need.
I think that's so important too. And as a member, I am sure any of the credit unions who work with are so appreciative to have that knowledge and information from you all who specialize in that to really influence how their credit unions support them going forward. So credit unions already provide some student lending options, while others may still be considering or exploring the idea. What impacts have you seen in credit unions that you work with that provide these options and resources to their members? And how can CU Student Choice come alongside credit unions and support them in this journey?
Yeah, well, we've to date helped over 115,000 families through the credit unions finance their education and make these dreams happen. We do it with very responsible lending and conservative underwriting. And what I mean by that is we have a very close attention to ability to repay. Credit unions want to be part of the solution, not part of the problem. And so part of what we look at is, how are the loans performing? Are we giving loans to people that are ultimately able to repay their loans? The answer is over 17 years now of the CUIS's operation, a resounding yes. These are very well-performing loans, meaning that we're not overburdening people with access to debt. And again, gets back to what I was saying earlier around when done responsibly, this could be one of the most important and empowering investments someone can make in themselves or for a family and what they can do for their kids. And so being part of that solution as a part of the problem is really paramount to the credit unions involved in our program. We've evolved the CUISO here in a number of ways that I think are really interesting in recent years. The first is what we're calling career ed. Career ed these are generally non-4-year schools, alternative education options for people that still require some financing for the education. So we've done a lot of nursing programs, pilot cadet programs for some of the major airlines, utility lineman programs, and we're looking at others that where a 4-year degree may not make the most sense, there are still some very, very good careers out there with very good outcomes that just require a little bit of financial support to get through those programs to begin with. So we're super excited about supporting credit unions that are interested in helping their members outside of that traditional 4-year degree. So the other thing that we have done since our inception that is still very innovative in student lending or private student lending is only through America's credit unions today can a family secure a line of credit for the education expenses. And basically what that means is they can apply with the credit union for an education line of credit. They can apply once for that loan, and then they can come back in subsequent semesters or academic years and request draws on that line. So again, for the typical family, if you've never done this before, you may not know, but for a lot of families, they are taking out loans both on the federal side every year, and in some cases every semester, depending on the situation. And they're also taking out closed-end private loan at the same time every semester or every year. So again, only through America's credit unions today, through the Student Choice CUISO, can a family secure that line to help with the financing of the full degree that's being pursued over multiple years. And we're very proud of what that means for families and the peace of mind that's there, but also the simplicity of being able to go request those draws in a very quick period of time and get back to your business.
That's really awesome to hear. And I had a few credit unions came to mind that I had some conversations with this summer when I had the opportunity to mentor at the CUDE program, specifically based around offering support for those in non-traditional type school situations and programs. So we should definitely connect on that later on too, and maybe I can offer some support there. As we look into the future, what is CU Student Choice's focus on the road ahead?
Yeah, that's a great question. I've already mentioned the career ed lending that we're starting to really get into in a big way with several of our credit union partners. We've just launched within the past year a very exciting new technology platform after a few years of development and literally nearly $8 million of investment. We've launched a new loan origination system called Opal, which stands for the Open Platform for Accelerated Lending. It's an exciting, new era for the CUSO here. We own and control the full member experience, providing educational tools and tips that are built into the application. And we're employing next level underwriting into that to help make the process even easier for members to get through. We built this from the ground up on the latest technology and capabilities, API driven as well. And we're excited about the opportunities that can deliver to credit unions as their needs evolve at the credit unions. We have some credit unions that are, very, very focused on integration. They want the full experience to be there on the credit union website, with the CUSO being really non-existent as a brand with their members. And that's something that the new LOS is providing the capability to do. Another exciting thing that we've started working on the past couple of years is a website. Actually, it's called CUSelect. So you can go to CUselect.com. This is really a direct-to-consumer marketplace site. Think of it as the lending tree for credit unions with student loans. And this website helps credit unions more actively help consumers in the space. The biggest component of what that website is doing is actually matching consumers with credit unions they're eligible to join when they're searching for a private student loan, just helping them find a credit union that can actually serve them and understand what those rates and terms on their loans are. And so we've originated tens of millions of dollars in loans through that channel over the past couple of years, but we've been kind of quiet about it as we've, worked on how do you acquire, consumers more cost effectively. And, internet advertising is very expensive these days, but helping connect consumers at a time when they have a need for a student loan with credit unions that are there, it's a very compelling value proposition, right? A lot of people know what credit unions are all about. But again, they enter this very confusing time, and sometimes it's easier to say, okay, well, I'll just go to Sallie Mae or SoFi to get my student loan, even if the credit union is going to provide a better value. They don't even know where to start looking. So that's what CUselect is all about, and something we're super excited about the progress that's being made there. And if you haven't checked it out already, I encourage you to go take a look and give it a test spin. It's pretty cool.
We will be sure to link to that in the show notes. So as we wrap up the show, we like to have a little bit of fun with some rapid fire questions for our listeners to get to know you a little bit better. The questions are rapid, but your answers certainly don't have to be. Do you think you're ready?
We'll see. Let's go.
So who is someone in your life that was a great leader, and what makes them great?
Oh, that's a good question. I'm going to flip that question around a little bit. Instead of saying leadership. And I would take it right back to the origins of CU Student Choice. This CUSO came about from several leaders. Some might call them the old guard back in the day in 2007. Many of them have retired since, but leaders of very large credit unions that said, you know what? One of the things about cooperatives is the ability to cooperate, right, and collaborate together. And so people rolled up there, you check your ego at the door, you roll up your sleeves, and pretty big things can happen. And at Student Choice is an example, probably one of the best examples of the CUSO collaborative structure in the last 20 years in the credit union system. The credit union saying, we're not going to do this on our own, we're going to do it together. And Callahan was a big part of that. Chip Filson, John Jeffries were big instrumental forces in moving the initiative forward. John was actually the first president of the CUSO for the first few years. But a number of credit union leaders, Dave Serlo from PSCU, who has since passed, I remember being on an airplane flying down to see him in 2007. We pitched him on the idea and he said, all right, we want to be a part of this. What do we need to do? And just the interest among the credit unions and the collaborative nature, the leadership that you saw back then is just something that was truly special and something I'll remember the rest of my life.
I love those feel-good credit union stories. So if you're going to splurge on something and you really want to treat yourself, what's one thing that you might invest in a bit?
Well, I've got a few hobbies, I guess my family would say. I've always been into technology. So, the latest Apple gadget comes out, I want to have it. Things like that. More recently, during the pandemic, I got into pinball. So I have a few pinball machines in my house here. And those are just the most amazing machines to me because it's got computers inside of it, but it's also mechanical, a lot of mechanical stuff. And so when the things break down, you got to kind of get your hands dirty and get in there, figure out what's not working. And I kind of, for whatever reason, I enjoy that. Certainly, I love playing pinball as well. So that's sort of, if you know me, you know that I'm a pinball fan.
That's really cool. So if you travel for work, what city are you most excited to visit, whether that's a conference or a client visit?
I better not get in trouble here. Let's not say a client visit. I love going to San Antonio, Texas, for a few reasons. One, it's where our operational headquarters are. So we actually have a physical office space there and staff that are really, running the heart of the operations of the CUISO. But another reason is that that's where I went to college. I went to a small liberal arts school in San Antonio called Trinity University. Loved my time there in Texas. I'm from the DC area originally, but went down to Texas, and I like to joke with my Texas friends that it was like study abroad in my own country. Texas is Texas first, right? And country second. But I love the culture there. The people were great. And so when I go back down to visit, I reminisce certainly about my times when I lived there in San Antonio, but also it's just a great atmosphere and good people.
That's so cool. I certainly know what you mean when it seems like a totally different place. So what is a book that you think everyone should read?
Ooh, so I'm going to go outside of business books here and say I love sci-fi. My favorite book is a book called Snow Crash by Neil Stephenson. It came out in the 90s, so I guess you could call it a classic now, but I've reread it a few times. It's just a fun book that really, if you put yourself back when it was written in the early 90s, he coined the term avatar, right? We all know what an avatar is now. That was coined in that book for the first time. He had digital reading pads in the book. In fact, that was the inspiration for Jeff Bezos and creating the Kindle. In fact, I think the building there, one of the buildings on campus at Amazon is named after one of the characters in the book that's focused on the Kindle. So it's just a really interesting book. It's all about virtual reality and cyberspace, and the term metaverse was coined in that book as well. So you see the Facebook's evolved its name to Meta. Well, that's direct homage to the book there and what Neil Stephenson did as a futurist predicting what might happen in the future around all this technology and where we're headed with the internet, et cetera. So if you put yourself in the time and place the book was written, try to remember what it was like in the early 90s with respect to the internet. I think we were still using AOL back then, or maybe Prodigy or one of those things. We weren't very far in the internet. It is a pretty fascinating read to see what this guy dreamed up and how much of it has actually come in some ways true.
That's really cool. I think we should redo this question maybe. And because I like how you took it. So many people that I talk to, what's their leadership book or things like that? And yeah, we all get that. We want to read fun things too. So maybe I should redo the whole question to be something like, in your leisure, what are you reading? So I appreciate that there. What has been your best hack for creating balance and integration between your work life and your life?
Yeah, that's a good one. And I think something interesting about the CUISO here we didn't touch on before. When we launched the CUISO in 2008, it was the financial crisis. Part of what the CUISO was designed to do and still does to this day is we bring in experts from the student lending industry or consumer lending industries into the credit union system, meaning their CUISO is majority owned and controlled by credit unions. We're trying to bring some of the best and brightest here to provide that talent to help credit unions. And the reason I bring all that up is in 2008, we decided we were going to be a virtual company. People thought we were nuts at the time. Very few companies were doing anything like that. But we saw very quickly, hey, we can get this guy here that was managing Wells Fargo's student loan program for the last 15 years. He's interested in a job with us, but he lives in Denver. And his wife has a great job and kids are in school there and he's not moving. Okay, well, he's a seasoned veteran in the student loan industry. Do we really care where he works? And so we kind of went out from that way. And as I mentioned earlier, we do have a operations center in San Antonio now. So we're not 100% virtual anymore. There's just some activities and functions where it just makes sense for people to be together in the same place. And we've had lots of learning curves, both pros and cons along the way. But the answer to your question is, I worked out of my Callahan office for several years, and that was very important to create that separation from home and work. even though most of my staff were working from their home offices, I kind of wanted to be around other people working, or I thought I did. The pandemic then happened and I started working from home full time, just like all of my direct reports, and pretty quickly learned the challenge of doing that when you're in the same, structure for both work and for non-work. And so the most important thing for me has just been creating that dividing line. I have a home office at my house here, and when I'm in there, I'm working. And when I'm not in there, I'm not working. And that creating those boundaries, I think, has been very important for me as a lot of us work more and more from home these days. And to me, that's just been probably one of the most important things I've done to keep that line there as opposed to being too blurred.
I'm sure your family appreciates that line as well, so they don't get caught up into any meetings that they didn't know they would be involved in.
They hear a lot of it through the walls, I'm sure.
So we'll be sure to link everything we talked about today in the show notes. But my last question for you is, do you have any final thoughts or anything you'd like to share or asks from our listeners?
No, I think, again, just the reason we exist is to help credit unions be there for their members' needs, to not refer their members off to third parties that probably want that relationship, not just the loan as well. And again, what's most exciting to our credit unions and why they do student lending today is to have that productive relationship start with that new college-bound member, right? This is a relatively niche portfolio. Most of the credit unions aren't doing it to grow a huge student loan portfolio. But it's another source of productive lending and a good diversification beyond traditional auto mortgage and card lending as well. So the future expanded relationship opportunities with these members, the future young workforce professionals, is compelling. And after 17 years of doing this with the CUISO, we actually have data now to show that this is really what happens, right? It starts with the student loan for these members that got the student loan, and these members stay, in many cases, loyal to the credit union. Maybe it was mom or dad that introduced them to the credit union to get their student loan. But these turn into very, very productive relationships over time as people, enter those prime borrowing years of their lives, where they have not only direct deposit from their paycheck, but they have credit card needs. They want to finance automobiles, buy a house. And this can be a great way to establish that relationship before everyone wants that relationship. And that's what most of the credit unions would say they're most excited about the program.
Well, that's great. Thanks again, Scott, for being on the show. Stay well, and thanks to all of our listeners today for tuning in to the CUInsight Network. We'll be back again next time. Thank you.